This video presents an executive summary of Sterlite Technologies Ltd, or STL. Key metrics show the current price and market capitalization. STL is in a transitional phase following its April 2025 demerger, facing headwinds from U.S. litigation and slow profitability recovery. The verdict is a high-risk turnaround play, or a hold. A major strategic event was the corporate restructuring completed earlier this year. The global services business demerged into a separate entity, STL Networks. STL becomes a pure-play optical networking business, focusing on manufacturing optical fibers and cables. This is intended to sharpen focus, but STL no longer has services revenue to buffer manufacturing's cyclical downturns. The latest financial quarter, Q2 FY26, ending September 2025, shows signs of stabilization but lacks explosive growth. Positive metrics include net profit returning to black and improved EBITDA margins. However, negative revenue growth year-on-year signals that global demand for optical fiber has not yet rebounded to peak levels. The critical risk is the U.S. litigation, which is the single biggest quote-unquote red flag weighing on the stock price. A U.S. court affirmed a verdict against STL's U.S. subsidiary. The financial impact is a potential liability of over $101 million. STL is appealing this verdict, but until resolved, it acts as a cap on the stock price. The company has achieved a significant debt reduction of over 1,000 crore rupees in the last 12 to 18 months. This crucial deleveraging has improved the leverage ratio to less than 1x. This movement towards healthy levels ensures financial stability during downturns. Regarding valuation and technicals, the PE ratio is negative due to accumulated losses. The PB ratio indicates trading near book value. The stock has corrected 18 to 20% over last year and is trading near 52-week lows. However, the fair value target is 129 rupees, with a potential upside of approximately 35% if the U.S. litigation subsides and earnings momentum continues. The investment thesis can be viewed through a bull case or a bear case. The bull case relies on the cyclical low of the optical fiber industry, a leaner structure post-demerger, and cheap valuation. The bear case highlights the, quote, litigation bomb, slow revenue growth, and low return on equity. Let's summarize the investment thesis. The bull case is supported by the expected return from global 5G rollout and AI data center demand, lower debt, and historical low trading prices. The bear case is driven by the potential devastating payout of the $100 million plus litigation, shrinking revenue, and negligible return on equity. If you found this stock review helpful, please like, share, and subscribe. Also, drop comments on the stock you would like to be reviewed next.